The Unseen Millionaires: How Ordinary People Struck Gold in Silicon Valley. Want to know the real secret to tech wealth? It's not just the billionaires. This video reveals how thousands of regular employees at Microsoft, Amazon, and Google quietly became millionaires. We'll debunk myths and show you the undeniable power of stock options and historical stock splits, like Microsoft's 9 splits by 2003. Learn the key strategies they used to turn small beginnings into massive wealth. Get inspired to build your own financial freedom. It's more achievable than you think. We'll break down the exact numbers, historical stock splits, and the powerful lessons you can apply today to potentially transform your own financial future. This isn't just history, it's a blueprint for the millionaire next door. Don't miss it. The Irresistible Hook, The Myth and the Promise. It's one of the most enduring legends of Silicon Valley. The janitor, the receptionist, the cafeteria worker who walked into a tech giant's early doors and walked out years later a millionaire. It sounds like a Hollywood script, right? A heartwarming tale of rags to riches. And while the exact Google janitor story is more urban legend than verifiable fact for a specific individual, the incredible truth it represents is undeniable. Thousands, maybe even tens of thousands of ordinary people, not just the brilliant founders or high-flying executives, became truly wealthy by joining these tech titans in their infancy. Today, we're going beyond the myth to uncover the tangible facts, the precise mechanisms, and the mind-blowing numbers that turned modest salaries into multi-million-dollar fortunes for the unsung heroes of Silicon Valley. And most importantly, we'll extract the timeless lessons you can apply to your own financial journey, whether you're working for a startup or investing in the stock market. The risky dawn of tech giants, Microsoft. The pioneer of paper millionaires. Let's rewind to March 13th, 1986. A then little-known software company called Microsoft goes public at $21 per share. Imagine the skepticism. Most people knew IBM, but Microsoft? What was an operating system anyway? This single IPO is credited with creating an estimated 12,000 millionaires among Microsoft employees. Yes, 12,000! Many were engineers, but plenty were also in administrative, sales, or support roles. They took a risk joining a company that, while growing, was still a long shot compared to established blue chips. Amazon, the bookstore that became everything. On May 15, 1997, Amazon.com, an audacious online bookstore, defied the pervasive skepticism of the dot-com bubble to launch its IPO at $18 per share. Many dismissed it as a fleeting novelty, a niche internet retailer incapable of competing with the entrenched power of physical bookstores. Yet, propelled by the unwavering belief of early Amazon employees in Jeff Bezos's audacious vision, this nascent company was poised to rewrite the rules of retail. From that modest $18 per share, Amazon's journey has been nothing short of phenomenal. Consider this. If you had invested $1,000 in Amazon's IPO, that investment would be worth an astonishing over $2.5 million today, accounting for stock splits. This monumental growth isn't just a testament to a company's success, but to the power of foresight and relentless innovation in the face of doubt. Amazon didn't just compete with physical bookstores. It became a global titan, a one-stop shop for virtually everything, transforming the very fabric of commerce. and proving that even the most audacious visions, when backed by conviction and strategic execution, can yield unimaginable returns. Google, from garage to global brain. On August 19, 2004, Google, a company that had transcended its garage origins, went public at $85 per share. The dot-com crash had made investors wary of tech, and many still saw Google as just a search engine. Yet, for those who joined early, the opportunity was immense. A $1,000 investment in Google's IPO would be worth over $45,000 today, accounting for stock splits. This wasn't just about a search engine, it was about a company that revolutionized information access and continues to push technological boundaries. The common thread: what connected the rise of tech giants like Microsoft, Amazon, and Google? Employee stock options, ESOs, and grants. These weren't just perks. They were fundamental compensation elements that transformed the lives of countless ordinary employees, turning early believers into millionaires and proving the power of a shared vision. Stock options and their explosive power. What are stock options? Oh, forget everything you think you know about traditional salaries. Stock options are not cash. They're the right, but not the obligation, to buy a company's shares at a preset, often very low price, the strike price, at a future date. Oh, example, early Google employee. Imagine Alice, a project coordinator, joining Google in 2000. As part of her compensation, she's granted options to buy 1,000 shares at a strike price of, say, 0.10 cents, 10 cents per share. Her total potential cost to acquire these shares initially, a mere $100. 10 cents times 1,000 shares. These options don't vest immediately. Typically, they vest over 3 to 5 years. For example, 25% might vest each year. This is a powerful incentive for employees to stay and contribute. The magic of stock splits, the multiplier effect. This is where the real exponential growth kicks in. As these companies soared in value, their share prices became very high. To keep shares affordable and liquid, companies perform stock splits. Imagine being an early believer in Microsoft. From its 1986 IPO to 2003, Microsoft executed an astounding 9 stock splits. This wasn't just a minor adjustment, it massively multiplied ownership for early shareholders. To truly grasp the magnitude, if you had started with just 100 shares of Microsoft in 1986, by 2003, those same 100 shares would have ballooned into an incredible 14,400 shares. This powerfully demonstrates how early investment and employee stock options delivered life-changing financial realities for those who believed in the vision. Google didn't just revolutionize the internet. It created incredible wealth for those who believed in its vision, especially through its strategic stock splits. Imagine the foresight of early investors. On April 2nd, 2014, a 2-for-1 split effectively doubled shares, instantly boosting holdings. Then, on July 18th, 2022, a colossal 20-for-1 stock split further multiplied shares, transforming modest investments into significant fortunes. If an early investor like Alice had acquired just 1,000 shares in the nascent days of Google, holding onto them through these splits would have seen her original stake balloon into hundreds of thousands of shares. This incredible multiplication meant her effective cost per share would be reduced to mere fractions of a penny. Today, even a fraction of those vastly multiplied shares could be worth millions of dollars. A true testament to the power of long-term vision and belief in groundbreaking innovation. These aren't just figures. They're stories of ordinary individuals whose lives were transformed by seizing an opportunity and trusting in the future of technology. It's a powerful reminder that sometimes the greatest rewards come from believing in what's next. Amazon's phenomenal wealth generation. Amazon, the bookstore that became everything, also became a colossal wealth generator for its early backers, thanks to its strategic stock splits. This wasn't just growth. It was an explosion of value. Consider the incredible journey for just one share. June the 2nd, 1998, a 2-for-1 split. January the 5th, 1999, a 3-for-1 split. September the 1st, 1999, another 2-for-1 split. If you had just one share of Amazon at its IPO price of $18 in 1997, after these initial splits, you would already have 12 shares. Then came the game changer. June the 3rd, 2022. A massive 20-for-1 stock split. That single original share, costing just $18, would now be an astonishing 240 shares. With Amazon's current stock price hovering around $209.69 per share. As of June 20th, 2025, those 240 shares would be worth over $50,000. This isn't theoretical. It's a testament to the power of vision and long-term investment. When early employees and investors held onto their shares, they saw their initial purchase price become mere fractions of a penny per share. Selling even a portion of these vastly multiplied holdings meant millions in profits, transforming countless ordinary lives. It's a powerful reminder that believing in a company's audacious vision can lead to truly extraordinary financial success. The real millionaires next door. Beyond the janitor, the true scope of tech wealth creation. The captivating janitor story serves as a powerful metaphor for the unlikeliest millionaire. However, the real narrative of wealth creation in tech giants extends far beyond that singular image, encompassing a diverse range of dedicated individuals. The actual people who became extraordinarily wealthy were not just engineers. They were also vital sales representatives, dedicated customer support specialists, indispensable administrative assistants, meticulous IT technicians, diligent data entry clerks, and even the often unsung cafeteria staff. Microsoft's 12,000 millionaires. The staggering figure of 12,000 post-IPO millionaires at Microsoft isn't just about Bill Gates and Paul Allen. It encompasses thousands upon thousands of regular employees who received stock options and had the foresight and discipline to hold on. These were individuals from every department, proving that a stake in the company's success could redefine financial futures. Similar, equally compelling stories are abundant from Google and Amazon. Many individuals who joined in the early 2000s, often receiving what seemed like modest grants of restricted stock units, RSUs, or stock options, found themselves with 7-figure portfolios by the 2010s. For instance, an early Google employee receiving RSUs valued at $50,000 in 2004 could realistically see that grow into millions, given the company's exponential rise and stock splits. Similarly, an Amazon employee receiving options worth a few tens of thousands, could have become a multi-millionaire. While specific names are often private, countless verified anecdotes from financial advisors, candid discussions among early employees on platforms like Reddit and Hacker News, and even rigorous academic studies consistently confirm this widespread wealth creation. This isn't urban legend. It's a documented phenomenon. The millionaire next door. Crucially, these weren't trust fund beneficiaries or Wall Street titans. They were often everyday individuals, suburban families, teachers whose spouses worked at Microsoft, or recent college graduates who took a calculated chance on an unknown startup. They are the true millionaires next door, whose incredible financial journeys underscore the transformative power of being an early part of a groundbreaking company. Their stories highlight that genuine opportunity exists, not just for the founders, but for every individual who contributes to a shared vision. What set them apart? The qualities of true tech visionaries. The individuals who achieved extraordinary wealth through early tech investments and stock options weren't just lucky. They possessed a unique blend of qualities that set them apart. Their stories offer powerful lessons for anyone looking to capitalize on future innovations. Foresight and risk tolerance. These pioneers saw potential where others saw only risk or dismissed groundbreaking ideas as fleeting fads. For example, during the dot-com bust of 2000 to 2002, the Nasdaq Composite Index plummeted by nearly 77%, wiping out trillions of dollars in market capitalization. Yet, individuals at companies like Amazon and Google, which also saw their valuations significantly reduced during this period, had the courage to believe. They recognized that these companies were not just creating products, they were building entirely new paradigms. Patience and conviction. Their wealth was forged not in quick trades, but in unwavering conviction. They held through the tumultuous dot-com bust, weathered the severe 2008 financial crisis, which saw the Dow Jones Industrial Average fall by 53% between October 2007 and March 2009, and navigated countless market fluctuations. Their belief in the company's long-term vision was paramount. For instance, an employee holding Amazon stock through these downturns, despite seeing significant paper losses, ultimately reaped massive rewards due to their conviction. The power of time. Ultimately, their immense wealth wasn't built overnight. It was a profound testament to the unparalleled power of compounding returns over decades. By allowing their initial stock options and early investments to grow, split, and appreciate over 10, 20, or even 30 years, they unlocked financial freedom that few could have imagined. Consider an investment of just $1,000 in Google's IPO in 2004, which would be worth over $45,000 today. This vivid illustration shows that in the world of investment, time is not just money. It's the most powerful amplifier of wealth, turning small seeds into towering fortunes. Timeless lessons for your financial journey today. 1. The enduring power of long-term investing. These stories are the ultimate proof of Warren Buffett's wisdom. Our favorite holding period is forever. Time in the market beats timing the market. For most of us, consistent long-term investing in quality assets is the path to wealth. Historically, the S&P 500 has averaged approximately a 10% annual return over the long run. Imagine investing $100 consistently every month for 30 years at an average 8% annual return. You could accumulate over $1,400,000. This growth isn't about perfectly predicting the next market move, but about consistent participation and patience. 2. Believe in transformative innovation. Look for companies solving real problems or creating new industries. Do your research. Could a company genuinely change the world, even if it seems niche now? Think about the early days of AI, sustainable energy, or biotech, sectors that are now experiencing exponential growth. Invest in the future, not just the fleeting buzz. 3. Leverage equity compensation wisely. If you work for a startup or a company offering stock options or restricted stock units, RSUs, understand their immense value. Don't the virtue of patience. These fortunes weren't built in a year. They required holding through market corrections, like the dot-com bust, where the Nasdaq plummeted 77%, or the 2008 financial crisis, where the S&P 500 dropped over 50%. Successful investors trusted the long-term vision, avoiding emotional decisions based on daily market swings. True wealth is cultivated over time, not overnight. 5. The ordinary path to extraordinary wealth. You don't need to invent the next big thing or be a tech genius. Financial success is often built by ordinary people, making consistent, smart financial decisions over time. It's about starting small, staying consistent, and focusing on growth. The millionaires next door are often suburban families or recent college grads who simply committed to a long-term financial strategy. 6. Diversify your bets. While early tech millionaires often had concentrated bets, for most investors today, diversification is key to managing risk. Don't put all your eggs in one basket. Instead, spread your investments across various asset classes, industries, and geographies, while a portion of your portfolio can be dedicated to higher growth, innovative companies. A diversified portfolio typically offers a more stable path. Studies show that diversification can reduce risk without sacrificing much in the way of returns, creating a more resilient financial future. Your legacy starts now. The legend of the Google janitor millionaire is far more than just a captivating anecdote. It serves as a potent reminder that the future and the wealth it creates belongs to those who truly believe in it, who work tirelessly to build it, and crucially, who wisely invest in it. The opportunities might look different today, perhaps not a search engine, but in AI transforming industries, sustainable energy redefining our planet, or biotech revolutionizing health. Yet, the underlying principles remain constant: vision, patience, and strategic action. These stories aren't just about billions made by founders. They're about how a single $18 share of Amazon or a $1,000 investment in Google could multiply into fortunes for ordinary people. Your journey to build real, lasting wealth doesn't require a crystal ball, but a commitment to these timeless principles. What's your take on these incredible stories? Do you know someone who became a millionaire next door through similar paths? Share your thoughts and experiences in the comments below. If this video inspired you to look at your financial future with new eyes, hit that like button. And most importantly, subscribe to the channel for more insights into building real, lasting wealth. Your legacy starts now.